Let's welcome in our next guest. We have Mr. Sajiv Dhawan joining us now to talk to us about the markets. Sajiv, good morning. Welcome to NDTV Profit. Today we're seeing Idea Cellular and Bharti Airtel seeing very big gains coming. In fact, some of the other, telecom stocks like RCom and Tata Communications are also doing very well. What do you make of this kind of move?
Morning. Well, it's been a difficult sector. There's not been any good news for the stocks for the last few months since Reliance came onto the scene. There's clearly talk of a consolidation and a merger between Bharti and Idea. That would obviously be very positive for shareholders and see some of the consolidation which a lot of people are expecting or hoping for. So a bit of uncertainty, a bit of volatility, but it's not really a sector we are overly bullish on. And if this news does not pan out, you could see a sharp correction in both the stocks of Bharti and Idea. So if you've got some short-term trading profits, maybe you can lighten up. If you're an investor, then I think there are better sectors and better stocks in the market than Telecom at the moment.
Rajiv, I also just wanted to ask that, say if the merger happens between Idea and Vodafone, do you think it will be beneficiary for Bharti as well? Would that also be one of the biggest beneficiary of any consolidation in the sector?
I think they'll all benefit because of the fact that there's fewer players. They can have some better pricing. The economies of scale will improve, and the costs and the way they negotiate prices and what they can pass on to customers. So I think the whole sector will benefit quite substantially. It remains to be seen what Reliance again will do at the end of March. Do they continue with their scheme of free internet and very cheap calls or free calls? I think there are some issues on the connectivity still. There are some issues on the speed of the connection as well. So because of the sheer volume of numbers they've got, they are facing some issues. And at some stage they will have to start charging for the services they're offering. So it will be a very difficult or interesting few months for the stocks. But if a merger does happen, it will be positive overall. But the real effects of that could take another 3 to 6 months at least.
About the telecom sector, do you think that the delta there is very high? So say if there is any change in the tariff rates and the charges that these companies are charging now, the changes in EBITDA or the changes in the PAT number could be very, very high and significant if that was to happen?
I think so. You've seen that clearly with the pricing pressure because of Reliance. They're unable to pass on high prices, but still a lot of the charges in India for internet are very, very expensive compared to abroad. So we are cheap on call rates, but the big thing is data, and the data services aren't so cheap. So what Reliance has done is really maybe shaken up the industry and said that the other incumbent operators were charging was too high. So I think it'll be quite difficult for them to increase tariffs significantly after this sort of fall. Customers and consumers get used to lower rates, and it will be difficult. But yes, any significant increase will obviously affect their bottom line. But again, I think the impact of that will be at least 3 to 6 months away.
Steve, you initially said that telecom is not a sector that you like as much, but what are the sectors or the stocks that you like? We have the budget coming up. Is that going to be a big trigger? What would you look to invest in?
Well, we've had a fantastic couple of months. Anyone on the long side would have made money by virtually whatever you bought. You've seen a very sharp bounce back. We've been longer than Nifty, so obviously that's done very well. Or the auto stocks, private banks, even some PSU banks, they've all bounced back very sharply. Housing finance companies. Anything where there's a feel-good factor coming back that the effects of demonetization have slipped away, and that the budget is like to give some further tax cuts, substantial tax cuts, which will put more money into the pockets of the people. So you could see a further rise in auto stocks. You've seen stocks like Tata Motors, Hero, Bajaj bounce back quite smartly from their lows, so we continue to remain bullish on that. In private banks, Yes Bank continues its outstanding performance, and it's back above 1400 levels with good results. RBL Bank, a stock we like also in the private banks, has gone back to 400, so we'll hold on there. So I think it really depends where your comfort levels are. The IT sector will struggle over the next few months with the uncertainty from the policies of the Trump administration. And you've even seen stocks like ITC post-demonetization, Hindustan Lever, they've not really sold off too much. So I think that generally the market outlook is quite bullish. FIs have turned buyers again. Domestic institutions were consistently buyers. And retail investors, as I've said, have got a lot of money in their pockets as of now because they've made some good money over the last couple of months. So the key question to be is, do you lighten up ahead of the budget, or do you take those positions going forward over the next few days? And then you have the RBI policy. So personally, we're looking to lighten up a little bit, and again, selling the put options in the index or individual stocks where we're comfortable to buy again at lower levels.
Are you foreseeing a correction post the budget, since we've already had a strong run-up over the last month and a half?
Sorry, I can't get the question.
Do you think the markets could correct post the budget, since the expectations are so high? Is room for disappointment larger?
Well, we've had a 200-plus point move on the Nifty, but if you go by some of the rumors, this is going to be an exceptional budget. And I think the feel-good factor still across the board is not there. So after demonetization and the sort of slowdown in growth, this is an opportunity for the finance minister, despite the sort of difficult fiscal situation he has, to sort of reignite the sentiment, give us some infrastructural push again, come out with some big reforms and tax cuts. That doesn't mean hiking the rates by 50,000 or a 2% cut in rates. That's not really significant enough. If he does something substantial, which is way beyond the common expectations, that will take the market substantially higher and even above that 9,000 levels. If he doesn't, then yes, there could be some profit taking. But again, I don't really see the Nifty slipping below 83, 8400, because you have the RBI policy coming up and there's a very high chance of interest rates coming through. So there will definitely be a swing of a couple hundred points on the Nifty either way, on the budget day or immediately after. But post that, we'll then go back to what the global flows are like and what the policies of the US are at the moment, because there's a lot of news coming on a regular basis there, and that's upsetting a lot of people and could have some impact on financial markets going forward.
Sajiv, if the budget were to change any capital gain tax here in India for equities, or any classification of equities in terms of short term, long term, or any changes over there, do you think markets can react negatively, at least in the near term?
For sure, if they touch the long term from 1 year to 3 years, I think that would be very unfair and very bad. Personally, I think, like abroad, we have a capital gains exemption limit. I think maybe the first few lakhs of profits, even on short terms, could be tax-free. That would encourage more people to disclose their profits and bring more people under the tax net. There's talk of STT going up. That would be negative, because I think we've got to remember that 40-50% of the trading is algorithm trading, and that generates a lot of volumes and liquidity to the markets, and those people are very sensitive to the taxes. So any sharp increase there could affect their trading, which in turn would affect the liquidity in our already not so deep market. So that's a key concern. If he did anything which the markets are not expecting on the taxes, that would be a short-term knee-jerk reaction. But as always, the markets will get over it. But the knee-jerk reaction could be quite sharp on the downside.
But do you think markets are not already factoring in any changes? Isn't that one of the big worries?
See, markets will hope, and if you read the newspapers or the media, there's opinions across the spectrum what he'll do with STT, whether STT will go from 1,000 rupees to 2,500 rupees per crore on futures turnover, whether there'll be a 1 year to a 3 year tax break on long term, whether there'll be a 10% tax. So there are very, very mixed opinions. It's only when the actual news comes through that the final reaction will be there. But what you've seen in the markets over the last few weeks is that there's a lot of positive expectation, and there's the feel-good factor is slowly coming back. And if the finance minister can manage to not disappoint with some negative surprises, you'll see the markets move up quite substantially from here, because the short positions which will get built up will be forced to cover at much higher levels.
Right. In terms of changes into corporate tax rate, are markets expecting a lot of changes over there, or direction on the positive side, or in the next 2 years, what will be the rates, or 3 years, what will be the gradual decline in the rates? That is what something that markets would be looking at?
Well, yes, that's been a factor and something the market's been expecting for the last couple of years, actually. The rates were meant to go down by a couple of percentage points every year, so let's hope that at least as a start of a 2% cut in the corporate rate of tax this year, and over the next couple of years there's some clarity on how he's going to reduce it further and reduce those cesses. Once the corporate rate of tax comes down to 25%, even lower, obviously that's a big positive. You've got the US, which is talking about some very dramatic tax cuts. So India and the rest of the world will have to do something, otherwise it will have an impact. Corporates in India need some help, especially at the time, as I've said, where that feel good for the general economy and the average person is not really there yet, just yet.
Right. Say if US cuts tax rates and India cuts tax rate, do you think it really makes a lot of a difference? Because investors look at dollar return, and that's why what tax rate happens into West is something which is important.
It's all about sentiment and the feel-good factor. In the end of the day, when markets run on exuberance and on expectations, the US will chart out its own course now. That's been made very clear. If the corporates there do very well, one argument could be they'll be having excess funds which indirectly will find their way back into emerging markets. So it's not that the US does well and the rest of the world suffer. But if the Indian government can manage to reduce corporate rate of taxes, it's obviously better for shareholders, it's obviously better for equity markets, it's obviously a great positive for anyone involved in the equity markets. The government has to obviously carefully balance its books and control the fiscal deficit. That's what the FIIs and the large institutions will be more worried about. It's fine for me to say, great, let's have some more money in our pockets, but the finance minister also has to balance the other side of the book. So unless he can raise revenue from some other form or increase the tax net, which they're trying to do, it is a difficult job for him at the moment.
Right. As far as earnings are concerned in Q3, do you think they are better than what the street was earlier anticipating?
I think so, yes, Pankaj, because of the fact that the demonetization impact has not damaged the balance sheets or the bottom line as much as could be expected. You've seen that not just in the auto stocks, you've seen that also in some of the FMCG, and most of the results, there has been some impact, there has been some concerns, but even housing finance companies, which could have been quite badly impacted, have announced a decent set of results. So if the worst is over, I think the markets generally have seen the results on the positive side, and even the guidances by the company so far may be a bit circumspect, but they're not doom and gloom, and they're not as gloomy as the expectations were maybe a month or two ago.
All right, Sajiv, thank you so much for joining us on NDTV Profit.